Hello everyone, this is Terry with Futures.io, and as always I would like to thank you for joining us today. It is my pleasure to welcome back John Hoagland from TopstepTrader for today's webinar, Identifying Crucial Levels. Throughout the webinar, if you have a question, please feel free to type them into the questions box. We'll do our best to answer them at the end of the event. This webinar will be recorded and posted on Futures.io website within 24 to 48 hours. If you're watching us on YouTube afterwards, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I will hand it over to John, and you'll get the pop-up to share your screen again.
Okay. All right. We shared?
Yep, looking good. She's all yours.
All right. Thank you very much. All right. Well, welcome everybody, and I appreciate you trusting me with your time. We're going to take a good look at a couple of situations where we were able to find some good levels, and we're going to talk a little bit about TopstepTrader as well. Just to introduce myself, my name is John Hoagland. I'm the Senior Performance Coach here at TopstepTrader, although I much prefer middle-aged performance coach. That's my title here. I am a third-generation trader with more than 35 years of futures industry experience, not all of them actively trading. I've been actively trading for about 26 of those years. Did trade on the floor of the Chicago Mercantile Exchange for over 25 years. As the opportunities on the trading floor began to dwindle, I decided to make my move to screen trading in 2009. There was a pretty good unlearning process involved with that, as well as a learning process, going from the pit where I could see my competitors to the screen where I cannot. It was a year before I took a live trade on screen. Excuse me. I apologize. But since about 2011, I have been helping traders develop at TopstepTrader since, again, about 2011. It is something that I really enjoy. It makes me very happy to see people that are struggling at least to be able to improve their performance to some degree, and it is something that I look forward to just about every day. As far as the third generation trader, my grandfather was a cash grain trader in South Dakota and Iowa and Nebraska. My dad was a floor trader and a hedge manager for Ralston Purina on the floor of the Chicago Board of Trade for 40 years. And that just kind of made sense for me to continue on in the family tradition here. This is, I don't even know why this is on here. This is a Chicago Tribune article that was about us and about me and about the TopstepTrader program. It is, again, something that I truly enjoy and something that I'm very proud of when I can help somebody struggling in futures trading and get them to a level that they have not achieved. This is the CFTC disclaimer report. Yes, trading is risky. You can lose more than you have in your account. I am not going to be suggesting the buying or selling of any futures, option, forex, anything in this. And remember that this is purely for educational purposes. There are lots of ways to find good trades. We're going to just be talking about a couple of them at a really high level today. All right. So, market knowledge plus self-knowledge times strategy and preparation equals success. Here at TopstepTrader, we're all about trying to help people find this success through all of these: market knowledge, self-knowledge, strategy, and preparation. Preparation, we start on Sundays with the weekly kickoff. The weekly kickoff has important notes about the markets that we trade here when there are specific events due out. There's also what we call the weekly kickoff levels. These weekly kickoff levels have been proven very valuable to all of our traders that take a look at this particular email here. You can kind of see on these charts here, there's horizontal lines that represent areas where we believe longer, stronger money will need to adjust inventory. And it's very important, of course, to understand who your competitors are at any particular time. I also present a market forecast every morning on YouTube. It's at 8:15 Central Time. We take a look at really the four major markets that we trade here at TopstepTrader: the Emini, S&P, crude oil, gold, and the euro. So we look forward to seeing you attending that. Hopefully, we also have at the end of the day at 2 o'clock Central, we have a market recap where we take a look at the things that we were thinking in the morning, see how things played out, and see how things look for the following session. All right. So without further ado, I'm going to take a look at some of the live markets here. Now, I've got a couple of examples of how these weekly kickoff levels have helped day traders. These are longer term levels, but how they've helped day traders recognize decent, good opportunities and important levels for them to trade. So when we're looking for levels, it's very important to understand who is currently present in the marketplace. This is the Emini S&P 500. So when we're looking at these markets, I like to view them as basically auctions. Of course, that's exactly what they are, just never-ending two-sided auction processes that happen in infinite time frames. But when we're watching the auction process, we start to notice, and this is the S&Ps here, beginning of June approximately, we fall into an area of balance. We leave that area of balance. We fall into another area of balance. We leave that area of balance and create another one. So there's a couple of things in this that I want to point out. There's basically two major market states. There's range trade or balancing, and then there's trend, where the market is directional in one way or another. The market goes from ranging to trending, back to ranging, back to trending, back to ranging. The thing that sticks out in this chart to me, this is again the daily chart, is the fact that yes, we are continuing to move higher over time, but the areas of balance are getting closer and closer together. Basically, we're in an area of balance now that is really overlapping this recent area of balance. So when you're not only looking at the participants that you're dealing with on a particular trading day, you want to be looking at the particular market state. Now, there are several sub-market states. We're just going to focus on the two major market states right now: ranging or balancing and trending. So when we move into an area that we have never been before, as we have recently done in the S&Ps, it's very difficult to find important or inflection levels that will mean something to longer, stronger money. So in this case here, this gray line right here is a previous weekly kickoff high from just a couple of weeks ago, okay? And it is in essence just a measured move. So we take the previous swing low to the swing high, we take that measurement and we bring it up to this level. So this was an area a couple of weeks ago. This is a Monday right here, where we were looking at, okay, we closed above it on Friday. That should entice longer, stronger money to need to or want to adjust their inventory. Okay, so we're looking at moving the market to a level where we're hopefully going to be bringing in some bigger money into the marketplace. Well, when we come in on Monday, we kind of recognize the fact that we're really not seeing the participation or the volume that we would look for in a move beyond an important inflection level. As a matter of fact, the market the volume really kind of starts falling off as we're approaching that level. Now, in the S&Ps, I find that the high volume tends to come in when the market is headed in the opposite direction. On the down days, everybody's piling in. So the volume in this particular case is continuing to fall off as prices move higher, but it's more the lack of momentum that concerns me in this regard. Now, for those of you that are familiar with the market profile, I'm going to put up a market profile chart of, in essence, this whole section right here. Okay, now these profiles represent only the regular trading hour session. Okay, now we'll talk about why I do that in just a second. So I'm going to bring this over here. And if we're looking at these markets as an auction, in an auction eye or lens, we're looking for continuation to the upside. We're looking for completed downside auctions. Okay, this is that Monday that I was pointing out. The volume was very low, very small range. Well, the Friday before that, okay, that's the day we kind of broke out over this 30-12 level, which we currently are trading or closed at today. Sometimes these levels become a little bit magnetic. So this is the day we closed above it. The following Monday, we would be looking for some continuation to the upside. We would be looking for longer, stronger money to need to or want to adjust inventory to the long side or to get out of shorts. Okay? But it didn't happen. We didn't have any real excess or rejection at the highs on Friday, but we also did not have any excess or rejection at the lows. Monday, same thing. Now we see that we have a little bit of excess. Price maybe got a little bit too expensive up here. Buyers weren't willing to pay that anymore. Perhaps the entire trading community, without the benefit of longer, stronger money coming in, was a little bit too long for this market to continue to the upside. So we have no excess, no complete downside auction. Even on the following Tuesday, we have no complete downside auction. This was something I was telling my coaching clients. There's something amiss here. We're not seeing what we would be looking for up at this level for continuation. We may be headed the other direction. On this Tuesday, when we opened below this 30-12 level, we closed below it, we opened below it. This was the beginning of a very emotional move to the downside that continued for 2 days. We have a completed auction down here. The following day, we open higher, we open again near that important inflection level. Okay, we're talking about finding important levels. Well, we found one here. The market opens higher, and then another emotional day to the downside. And again, we have excess or the end of an auction. The following day, ranging, now we continue our march to the upside. So this is just one way to be looking at important longer inflection levels in order to find decent day time frame trades. When we take a look at when we closed back below this level the following day, the overnight trade and the regular trading hour trade did not trade much above that 30-12 level. This is a very important level because it offered an opportunity for a short that paid very handsomely throughout the day, and there was very little risk on this trade. Following day, unable to reach that level again, another emotional day to the downside. When we're looking at these markets as auctions, when the auction begins to exhaust itself, it needs to either pull back or balance to be able to even out the inventory to be able to continue the move to the upside. If we're looking at this on a 30-minute chart, I don't think I can go back that far, but even on this 30-minute chart, I have just regular trading hour sessions noted on this chart. Why? Well, in the Emini S&Ps, there's very little volume in the overnight. Occasionally, you'll see a little bit coming in the London session, but the major participants, the people who really move the money in this market are trading during regular trading hours. Okay, so when we have an opportunity, when we're looking at important levels to trade at, when we are in short time frame. Okay, now longer time frame would have been an opportunity for us to continue this move to the upside. Now we've fallen back in to a previous area of balance. I can make a hypothesis. Everything we do is hypothesis, if you will. I can make a hypothesis to say, well, this was a previous area of balance, probably going to be more short time frame participation than longer time frame participation. Okay, so as an example, we have an up day here. We finished this day right at the highs. Okay, this blue line here represents settlement from July the 23rd, just last week, okay, or so. Okay, well, so when the market after hours takes a dive and in the overnight moves away from settlement, okay, when we have this occur, we can expect our direct competitors as day traders, our overnight weaker money traders, to be holding short positions as they have brought price lower consistently throughout the day. Well, when the U.S. market opens, they're looking for one thing. They're looking for help. They're looking for the U.S. market to continue their position and to help them to continue to make money in that position. As the U.S. market opens, if they don't recognize sellers coming into the market, they're going to be the first ones to bail out, and they generally will bail out right back to settlement. Okay, so here we have the market moving higher over time, and it does a pretty good job of holding rallies throughout the day. Okay, so I'm looking for another opportunity here. This was yesterday, very narrow range inside the previous day's regular trading hours. The market, here's settlement. Okay, I believe it was 30.2175 approximately. Let me double check that. 30.2175 settlement. So most of the evening, it started out to the upside, but we started to get a little bit short here in short time frame. Remember, this is happening overnight, so we're piling in on the short side and weaker money. The market opens, makes an attempt to move lower. Short time frame traders look for short time frame levels. This area, this red line right here, is the value area from this trading day that offers enough support for our short traders to start to get a little bit nervous and to bring the market not quite back to settlement. But when we know what we have coming out tomorrow with the FOMC meeting and the other information due out the rest of the week, where are we now? Well, we've basically kind of fallen into a range largely inside, okay, today's extended trading hour range. We have the same range here. We're right in the middle of it. The market is awaiting new information with the FOMC meeting tomorrow. So until that comes out, I will be looking at this market as a short time frame controlled market, and I will be looking for opportunities using short time frame levels, overnight lows, overnight highs, value lows, previous unchecked points of control. Okay, this was an unchecked point of control that we got down to and checked today. There's more lower, not too many higher. Okay, so we've got an unchecked point of control here, unchecked in regular trading hours. Okay, so looking at tomorrow, we all know the FOMC is coming out. I'm probably not going to be very active in the equity markets until after that comes out. I'm going to let the market play itself out. I'm going to let the knee-jerk reactions, whatever happens, play out, and then I'm going to see if I can, number one, recognize longer, stronger money coming into the marketplace. Longer, stronger money, the other time frame, the longer time frame traders don't adhere to short time frame levels. It's just one way that we are able to recognize their presence. Okay, there's lots of ways, and we never know for sure if we're right on these things until we take the trade and we see them play out against us or for us. I'm always looking for little risk on trades and bigger rewards on trades. I'm looking for trades that are at least 2-to-1 reward over risk before I even think about taking a trade. Now I want to take a look here at the crude oil. Oops. Because there was a pretty decent move late in the day today. Okay, inside this box, we are looking at short time frame levels with which to take asymmetric trades, or low risk, bigger reward trades. Something happened late in the day where this market drove right through an important inflection level and longer time frame. We have the API that just came out today. Not quite sure what that API came out as, but the way the market has resolved after the close, I'm going to say that it was probably a bigger draw than expected. Okay, so here we see, here's that level, okay, 57.80. The market really just opened long overnight inventory, opened, drove towards settlement, didn't quite reach settlement, only closed the gap. Okay, the gap is regular trading hour to regular trading hour session, just kind of rotated, and then finally the buyers came in and moved this market higher. It's almost as if somebody had an inkling as to what was going to happen tomorrow. Point being, that important inflection level of 57.80, just because it was run through in one direction doesn't mean if it's resistance, then it should be support. Well, after the market moved above it, it attempted to go back below it, but only by 2 ticks, and the move to the upside has continued. So I'm going to be watching this 57.80 level in tomorrow, and in the coming days for opportunities near that level. Of course, EIA comes out at 9:30 Central tomorrow. Pretty much anything can happen, but I haven't checked yet what the API number came out as, but it certainly looks like it was a bit of a draw. Now, I'm going to see if we can see a good opportunity in here from last Wednesday. Okay, last Wednesday is right here. Okay, this is the 24th. The EIA number came out with an 11 million barrel draw. Fundamentally, that should be a price mover to the upside, right? So the initial move to the upside was the knee jerk. Okay, 57.80 was still weekly kickoff high last week. It did not even get to it. The market turns around and we have an emotional move to the downside. Okay, but when we look at the previous profile, okay, we have some excess at the highs, but we don't have a completed auction to the downside. The market almost seems as though it's a little bit too long to continue to rally. Not just that, if you've ever heard of the colloquialism, trading colloquialism, buy the rumor, sell the news. It comes from the grain floor for many years when there was a release, let's call it crop production, that everybody was thinking was going to be bullish. Everybody's already in the market. When the number comes out, there's nobody left to buy it, and the opposite tends to occur. How do you plan for that? Well, the only way you're going to be able to plan for that is to understand how good the auction process is going, and recognizing we have an unfinished downside auction here. Maybe that needs to be kind of rechecked. This completed auction to the downside has yet to be revisited, and now we continue to scream to the upside today. All right. So that's really just a couple of examples of being able to recognize, number one, who your direct competitors are on any given trading day. Are you looking at longer, stronger money, or are you looking at weaker, shorter time frame money? Remember, the shorter time frame money trades to short time frame levels. Longer, stronger money does not. They look for those longer levels off the daily chart. Okay, here's weekly kickoff low is $54 even in crude oil. Today we've pushed crude to a level where we believe we may see continuation in longer time frame to the upside tomorrow. Nothing is guaranteed. Everything is hypothesis, and we do have information due out tomorrow that could severely change that. So we're always just trying to trade what we see and recognize opportunities as they present themselves. Here in the S&Ps, okay, this previous weekly kickoff level still remains somehow magnetic. It was resistance, it became support, became resistance, has now become magnetic. So, you know, it would make sense to me that the next bigger move in the S&Ps might start relatively close to this level. We get down below this level here, this weekly kickoff low, which is 29.86 even. Then we would look for some adjustment in inventory in a longer time frame. We're looking for the market to get up to 30.55 for a new continuation to the upside. Okay, so I'm hoping that this has been helpful. I'm going to continue on with the presentation about TopstepTrader now. Who is TopstepTrader? Well, this is a picture of our team from our Christmas party. We are a brick and mortar company. Here's a picture of part of our office here. We do like to give back to the community. This is a picture of our step up day when we spent a whole day cleaning up a beach here in Chicago. And we recently had another step up day up in Wisconsin where we helped repair and clean up a children's camp. So you can see there's me right back there. But a young company, and we're really excited to have the chance to talk to you about ourselves, as well as hopefully help you in some way with your trading. The idea of TopstepTrader is quite simple. We fund traders. We're well aware that there is a learning curve to trading. The trading floors are not available for you to live that learning curve anymore. I learned it. Our founder learned it. Michael Patak learned it. Dan, Mick, many of our people that work here, and many of the people that were crucial in getting the company started on the trading floor. We started as runners. We worked our way up. We eventually maybe worked for a trader who was able to back us at some point. It's not available anymore. And our founder thought that an objective evaluation on simulated accounts would help people get to the point where they are consistent and profitable, and we wanted to back them. Okay, so in 2018 alone, we funded over 1,000 traders. We funded 1,020 traders. There are videos of many of them on our YouTube channel. If you want to check out the YouTube channel to see the funded trader videos, check us out on YouTube. Make sure you subscribe and even get notification when we do our live market forecast and recap and other upcoming live opportunities to see us and see the markets. We also are consistently improving our unparalleled resources to help you excel. We have trade reports that keep your stats for you. They are private to you. We just added an opportunity for you to journal each day how you were feeling, what you were thinking, how your trading day went, all of those things. There's lots of resources for you to excel, including the forecast and recap. We all are well aware that the best trading system, strategy, methodology, or algorithm in the world doesn't matter without the capital to trade it or to scale it, and that's where we come in. So if you want to get funded, what do you do? How do I do that? Well, we've created the Trading Combine, basically named after the NFL Combine, where we're going to give you the tools, we're going to give you the time, you show us that you can do this, and you'll get funded. It's right now a two-step operation or process. Number one, yes, we want to see that you can profit, of course. Most important in step one, probably achieving your profit target. Step two is more about risk management. Step two is going to get you accustomed to the exact same parameters that you will have as you reach the funded account. Once you're in a funded account, step two, the rules will be exactly the same. The focus here is on risk management and discipline, as well as, of course, profit. In step one, there are a few rules. We don't want you to lose too much money on a given day. We don't want you to lose too much overall in the account. And we want you to basically trade within a certain number of contracts. We feel as though this step one is a great opportunity for you to get to know futures for one, find some consistency, and become consistently profitable. Once you are through with step one, you will graduate to step two, and again, the focus is more on managing risk. There are a couple of extra rules in step two. We don't want you to lose too much in any given week, so you'll have a daily loss limit and a weekly loss limit. We don't want you trading during major economic releases, like tomorrow during the FOMC meeting release. Okay, we don't want our funded traders trading during that. It's a major risk event. We're going to ask you to wait a little bit before you get back into the markets after that. And we want you to scale your contract size up as you make profits. And this just really does tend to make sense, right? If you're going to be trading, you start trading small, build your account, add contracts to your trading plan, continue to build your account, add contracts to your trading plan, and continue building your account. What you get here is guaranteed funding. There is no subjectivity once you are through and completed with step one and step two. You are getting funded, no question, no doubt. You're going to be able to keep 100% of the first $5,000 that you earn in your funded account. After that, we're going to be asking for an 80-20 split. Once you've made your $5,000, you keep all that $5,000. After that, we're only going to keep 80% of your profits. You will have the opportunity to trade additional products like Eurex products. Withdrawals are always free, and we are pretty quick with the wires or ACHs, and low commissions, of course. What traders are saying about us, they're saying it's the best place to learn how to trade. TopStep forces you to be disciplined and use proper money management. It's tough love. If you can't pass the TopstepTrader Combine, I wouldn't recommend trading a live account on your own. Trading with TopstepTrader offers many advantages. The most important advantage is the Trading Combine rules, which help you build discipline to understand, finally, what money management is crucial. So I don't want to take too much of everybody's time today. Apple earnings have just come out. They jumped on earnings already. It's going to be an interesting trading day tomorrow. Looking forward to the opportunities that the markets are going to offer us for the rest of the weekend. For the rest of everything. I'm looking forward to seeing if there are any questions that I can answer for you. I do have an offer for everybody. We're celebrating our 7th birthday right now, and we have these limited time packages that are available for you, and you're going to be able to, hang on one second, did I miss a shot here? No, I did not. Okay. All right. In order to get into the trading combine, there is a monthly subscription. There are also, you also have the availability to reset an account should you have a rule violation. These limited time packages are to celebrate our birthday, and you can get let's just call it a 50K starting balance trading combine with a monthly reset included, and you're going to be saving $67 on that opportunity on that. If you do have more questions about that, you can check out the info.topsteptrader.com birthday 2019. You can also contact our support team at support@topsteptrader.com, and we're looking forward to getting you funded. Personally, as a performance coach, I would love to have the opportunity to at least speak with you to get you hopefully headed in the right direction, and if not, the opportunity to work with you in a closer regard. Make sure you check out the website. Make sure you check out the limited time packages here, and we will be looking forward to seeing your success. At this time, I'd like to open it to questions if anybody has any questions. I know this was pretty quick, but I don't like to take up too much of people's time.
All right, let's see. If you have a question, please start typing them in, and I'll ask them to John. What are the data fees associated with trading once you get funded?
If you go into a funded account, the data fees are the professional data fees that the CME imposes on pretty much everybody who's a professional. So if you're going to be trading the Emini S&P only, that's one exchange. I think it's $105 per month, and that's a direct pass through to the exchange. Hang on one second. Okay, I apologize. Thank you.
Let's see. Are the profit targets per month?
No. The rules for the combine are there is no minimum amount of time that it can take you to get to your profit target. In step one, we're looking for a minimum of 5 trading days, but there's no maximum that we require for you to be able to reach the profit target. In step 2, we do want to see 10 trading days. However, again, there is no limit to how long it takes you to reach your profit target. I like traders who are methodical and cautious with their risk and take their time building an account. I think part of being a professional futures trader is to be able to maintain an account for a long period of time, build it over time, and to continually grow as a trader and know the markets better and know themselves better. So no, there's no time limit as to how long it takes to get to the profit target.
Okay. Can you explain a little on the coaching available in the packages?
There's no coaching available in the package. As far as the performance coaching is concerned, on Wednesdays, I have a group coaching that anyone is encouraged to join Okay, I usually start the session. It's about 45 minutes, and I usually start the session with something that has kind of come up in a theme in my personal performance coaching meetings, and then it's basically question and answer after that. If we want to look at charts, if we want to look at particular markets, that's fine. Specific markets are fine. You can find that information on the website. If you look at the bottom, it says performance coaching. There's a link that will give you an invitation to the group coaching. As far as personal performance coaching, that is in that same spot, in that same level, in the same area, and it's something that I really enjoy. There's only so many people that I can take right now. I do have space open. What it entails is we're going to spend about an hour getting to know each other on the telephone. We're going to talk about the education that you have, your experience in trading futures, and we're going to set up a couple of kind of homework assignments where you can work on your own to kind of get a little bit of knowledge of how the auction process works. Every day you're going to have a private message open with me, so if you have questions, want to share charts, want to share trade ideas, anything like that, I'm available for you from 8:30 till about 3 o'clock Central Time. I also have a meeting with all my clients that is at 9:30 Central Time till about 10:30 Central Time. Sometimes it goes a little shorter. Sometimes it goes a lot longer, depending on what's going on in the marketplace. So we'll be talking about the context of the market, who we're thinking are currently moving the markets, if the markets are moving, and where we're going to be able to find good opportunities in that market. Again, that's daily. So for the $195 monthly fee, I feel like we're giving it away, but it's very important to me to be able to have the opportunity to work with traders and to be able to see them succeed. So like I said, I do have some space available. And I try not to overextend myself, so that when somebody has a question or somebody needs something, I'm as available as I can be. There are times when I have meetings and everybody needs a little time off once in a while, but I usually make that up over time for my clients. And again, that if you go to TopstepTrader.com, go all the way to the bottom, it's kind of hidden down there. It says performance coaching. And if you click on that, you'll get more information about it. And if there's more information that you like, make sure you contact support at TopstepTrader, ask them for more information, and I can even make time to talk to you about the offering when I have a chance.
Okay. Is there any expected ROA or return on investment after you are funded?
No. No, we want you just to stay in the account, build the account over time as you are comfortable. We're not going to be pushing you to trade bigger if we think you need to. We're really just kind of act as risk managers and accountability. Mick Aronimo is our risk manager. He is available to talk to all of our all of our funded traders if they're struggling, if they have questions. He's available for you. But again, there's no minimum amount of profitability for our funded traders. We just want them to just continue to learn and grow. Like I said, build the account over time, get better and better at what they're doing, get better and better at knowing themselves, because that is vitally important to consistent and continuing profitability. But no, there's no specific return on investment that we're looking for. It's a good question. Thank you.
What about commissions? How do commissions work?
Commissions are about, as I remember, 53 cents a side, but you also have to add exchange fees and NFA fees to that. So it's a little bit different between different products.
Okay. He's asking about the monthly fee starts when the funded account are during simulation mode. I'm assuming he's talking about the CME fee.
Yes, the data fees for the funded account start when you start your funded account.
Okay.
Okay, yeah, no, there's no CME data fees for the
Simulation.
combine.
Okay.
Right.
Is the ES settlement price the 5 p.m. close?
The ES, I'm sorry. Oh, settlement price?
Yes.
Oh, that's a good question. It's approximately where the close of the 3 o'clock bar is going to be. Okay, now there is hang on 1 second. Oh, there is a bulletin that the CME, here, let me pull this up. There's a bulletin that the CME puts out, and here it is. Okay, here's the URL if you want to. Maybe I should put it in the chat room if you want to check it out.
Okay.
Oh, hang on. No, that's not what I was trying to do. Hang on a second here. I'm going to put it in the chat room for everybody. And this has some pretty vital information in it. It includes I don't know if you're going to be able to see this. Organizers and panelists only.
You should be able to hit that drop down, hit all entire audience as well. If not, you
And
can just send it. I can resend it.
okay, yeah, I'm not seeing that as a.
Okay.
Send. Okay. All right. So there's volume information, open interest information, and settlements are always going to be on there. I can give you an example here. Here's settlement price from yesterday's crude oil right here, September 56.87. That's a question and you want to put it on your charts. This is a good good resource for that.
Okay. The question about the fees was on the $187 a month for the 30K package.
187. Okay. Hang on. That is a monthly subscription that includes one monthly reset. So, for example, if you get into a 30K combine and it takes you 2 months to reach the profit target, you're going to be paying $187 a month as a subscription until you get to step 2, where that subscription will continue in step 2. Once you're finished with step 2, our subscription ends. There's no subscription for being in a funded account. The only fees would be your CME data fees at that point.
Okay. All right, I think that's all the questions for now. Thank you for the webinar, for the information, and for spending some time with us this evening, John.
Oh, it's my pleasure. Again, thank you all for trusting me with your time. Hopefully there's some good information that you're going to be able to take into your trading and help you improve over time. That's the goal.
All right, have a good evening.
Thank you, and thank you, everybody.